Well, hello everybody, I'm LA and this is your daily NeoTA wrap. We take a look at these markets and we always do it from a neoclassical perspective, asking ourselves just one question: what happened today? What does it tell us about the coming days? Do this show 4 times a week. It's Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. You can get it there. You can subscribe if you choose. And have anytime I push content, you'll be notified. You can also subscribe to us on Twitter. I don't talk about this a lot. I do log in here, but I do have a Twitter account if you want to log in, or if you want to join that. When I post to Twitter, you can also grab information from there. Let's pop in here, look at the numbers right quick. And the Russell is wrong again. I don't know why they always seem to have this lag problem, or at least a lot of times have the lag problem, but Russell was slightly down today as well. So we were basically flat today, really nothing happening. Gold was down, silver as well. Bonds sold off on the long end of the curve again, up on the short end of the curve. That curve is changing its steepness, if you will. USO, which is the oil market, up again. Nat gas as well. Oil's been on a tear. It's been up something like 11–12% probably in the last week and a half. Dollar got knocked back down 0.75%. I don't know if you're noticing, but again, this is just another chop sign. This thing is chopping around quite a bit now, and it's a lot of up, a lot of up, down, and we've seen that also in the rest of the markets. I'm going to start with the Russell. Remember, the Russell was the first to get over the breakdown bar. Gets over it yesterday. Gets over the swing point high yesterday as well. What does it do today? It does an inside day. Does not come back to test that high. That high is 1268.16. Low today was 1271. So you miss it by about 3 points. You actually don't want to see this tested right away because the odds are a lot better if it doesn't. So if I'm bullish, I'd like to see this thing continue to push higher, but so far it just hasn't been able to do it. But that's the Russell. That's the one that's leading the pack. The one that's not leading the pack and is actually pulling the other way is the NDX, and the NDX also an inside day, volume a bit lighter, still hasn't attacked that bar yet. All across the indexes in many of the sectors today were inside days. Inside days typically don't tell you very much. If you have a nice big push up like we did on the Russell, an inside day is actually a nice consolidation day. But elsewhere, who cares? You're inside. There's really no information, at least when you're inside, because you're not testing anything reasonable to the prior bar. And if you had tested anything before the prior bar would have tested it. So it's not really telling you anything. So, inside days to me are kind of no ops. So anyway, looking at the index is really no ops from that perspective. I'm going to spend a little bit of time. I have no questions tonight. I'm going to spend a little time looking at earnings again. The earnings that were out today, some that were out last night, looking at those in detail. A little bit of talk about the overseas markets again because we got some action over there. And I want to talk a little bit about the oil market tonight as well. So when I come back, I'll look at those with you. I'll be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So there's been a lot of questions by subscribers, by viewers, asking about the oil market. It's at a critical point, so I want to keep looking at it because I believe it's going to fail up here. And what we're looking at, let me draw some lines in here. What we're looking at is this area here. That was the first big spike up off the lows. And when we look at that area, what we see is that we haven't quite gotten to that high yet. That high is 2029. We got up as high as 2024, I believe, 2022 today. So we're almost to it. The swing point high, there's two of them, right? The nearest one is 2019. So today it went over, tested it, 34.9 million. Here you had about 30, so you're coming up with about the same volume you're testing on that one. But the big volume's over here. I mean, look at the volume, 76 million. If you look at it on a weekly basis, it's also testing or attempting to test that swing point high. That was the first spike off the bottom, right? And when we're looking at oil itself, you actually have a higher low at the lows, right? So the volume over here was 167, the volume over here is 184. So I don't know that oil's done yet on the downside. And I know, with these kind of ramps, on a daily basis, it looks like oil's taking off, and maybe it's bottomed out. But I suspect you're going to get more, backing and filling, and if this really has bottomed out, maybe one more test down here will prove it. But right now, you're coming up, you're testing, you get a nice spike up. That's all it looks like to me. So that's oil, and we also know that there's a huge oversupply in this commodity. Now let's look at the stocks real quick, at the sectors. Here's the OIH. The OIH today, big push up on volume yesterday. Today as well, over, under, after an extended move. That's a 2-bar reversal, right? That thing wants to come back. If you look at it on the weekly, over 2 swing point highs. If it stays over them, and tomorrow's Friday, right, then that would say that this thing can get another 2 to 3 bars on the weekly time frame. So that's a pretty big deal. 36.90 is the number. That's about $1 down. So it's going to be a heck of a run to get back down underneath that. It's a little bit different here in that you actually have 37.68, and the top of this bar is 38.07. So I think if you close below that area, then that also, to me, and what I'm looking at right here is this little section right there, right? You close underneath that area, even if you don't get back under the swing point highs, and this is kind of a special case, that's resistance, right? When you get a breakout, the ideal is that you don't have any obvious resistance up above, and in this case you do. And so, I talk about that in trend trade setups. You do have obvious resistance, so that it lessens the probabilities as a result of that. Let's look at a couple more here. So that's the OIH. If I go over to the XOP, which also is doing a 2-bar reversal even more dramatically on the daily, and on the weekly, it looks better, right? This one got up higher. This one has it's a much more broadly weighted. I think the highest percentage holding in here is like 2%. Also has some of the refiners and pipelines and stuff like that in. It's been doing pretty good. So this one is traded better. Has an ABCD structure, can go higher. It's actually the best looking one. So I was just trying to see if there was anything else here, but I don't see anything. So tomorrow, can it close over the swing point high? It would be a break on 2 time frames. And then finally the XLE, which is the big integrateds. Integrateds go over, back under, actually have more volume. They're over the swing point high and have a little bit more volume too. So that on a daily looks better. And they're attacking their weekly. And so they're weaker, compared to the XOP, for example. So overall, it actually looks like it's going to hold here, but then I suspect you're going to get a pullback right after that. And maybe you'll get it tomorrow. I mean, tomorrow's Friday. Maybe those traders are going to take profits in the oil market. If I were them, I wouldn't be surprised to see them doing it. You make 10-12% on a market that's been hammered. In other words, you're going against the trend. Do you really want to sit there? Kind of hard to sit there and argue that you need to sit there. I forgot I do have a couple viewer questions, so I am going to come back and do those. But before I do that, I actually want to look at some of these earnings names. And it's because earnings are so important right here. So let's take a quick look. And bear with me just a second. Let me grab them. Okay, here we go. So AXP. Now American Express, it's sold off quite a bit. It's got a little bump going up. This is a sideways market at best. Looking at after hours, looks like they didn't go anywhere. They were flat after hours. BLK. So this is BlackRock, and BlackRock reported this morning, and that one's not going anywhere. Doesn't look like it's going anywhere to me. Citigroup reported this morning as well. Citigroup trades up, has a big high volume high, doesn't have the volume. That's going to test and probably fell at the highs. So that's a banker. CE, which is a chemical company, selling us. That one's going nowhere. Man, this sounds like last night, doesn't it, when everything was going nowhere. Cherokee, this was after hours tonight, and this one actually traded up, I think, after hours. Let me see here. Yeah, it was up a good percentage after hours. Looks like about 4%. So that one's going to trade higher, and it actually had a good looking chart. Let me go back to the CE because I see I was just glancing over here. It looks like it traded up after hours too. What does the weekly look like on it? Yeah, it's still just a big sideways range. So it looks like it's going to trade up tomorrow, but a sideways range. CNSI, which is a telecommunications converse, a nice big spike up. And they on a weekly were down quite a bit. And after hours, what is this one doing? Nothing. I don't see any trades on it. So, yeah, well, actually it is. It's up a buck, I see. 5%. Yeah. Yeah, so I guess it can run up into this bar maybe. Okay, well, going down the list here, I want to pick out, okay, let's look at a couple more big ones like Goldman Sachs. So Goldman Sachs over the top, back under, has volume. That's going to trade higher. Goldman looks pretty good. Here's another banker, KeyBank. KeyBank actually missed on the number, and like Wells Fargo, they trade lower and they come in and buy them. And this looks like it's going to test the highs. Netflix, this was a huge name today. It was up like 90 bucks, 18%. And this is a breakout over everything, right? Daily, weekly, and it's going to be on the monthly as well. So big mover on Netflix. That's enough to get people excited. Now, I talked about this one last night, saying I've been watching it. Looks like it traded down after hours. Let me get the quote on it. Traded 75.75 down $5. Yeah, so that they're going to take the wind out of this one finally. Now that's interesting. This one's going to come right into a key area, so I'll be curious to see what the volume looks like tomorrow. That key area is in this zone, and that's right where it traded to tonight. Maybe a place to pick it up. We'll see how they trade it. Philip Morris, big name, probably didn't do anything, and yeah, actually it was up $6. So yeah, that's not bad at all. Let's see what it looks like. Yeah, Philip Morris is going to hold its range here. Going to come into the breakdown bar, has the volume that can get all the way back up to the highs. Not a bad showing. Schlumberger, let's see what this one looks like. Got volume, get over the highs. Yeah, this one can go higher too. United Healthcare. And this one has volume, and this one will probably attack that high as well. So overall, not bad again. I mean, that's 3 days. Earnings aren't great, but they're not selling them for the most part, right? For the most part, they're either hanging in ranges or they're getting a little push up in some of these cases. Now, the first couple of weeks typically have been the better of the earnings, And so that's what we're seeing here so far this year, or this particular earnings season. So we'll see if that continues. But at this point, again, you can't argue with a market that wants to go up. If it wants to go up, it wants to go up. And right now, there's nothing to tell it to stop going up, and it keeps going. I'll be right back. We'll do some viewer questions and the final thoughts. Okay, as we come back here for some viewer questions, I've said that there's multiple ways to get a hold of me and let me know, and I usually point you to our website. But I noticed an innovative move here, and I didn't really think about it, is ask me questions on previous shows. So it's kind of a cool way to do it. I get the message, right, and I just replied and said, yeah, I'll add it tonight and do it. So 2 questions here having to do with BioC and IG. Could you analyze what it's like to own a small stock like these? I bought them here. So Bio 302, and now it's 240. Sad, but waiting for months. Can you put that? Okay, so let's take a look at these. So BioC you got in at 302. Let's take a look at that one first. All right, 302. I don't know where you bought it, but somewhere in here or maybe on the way up. Okay, so the first thing is, what do the trends look like across the time frame? So if I pull this back and look at it, okay, this thing's been trending down, had one big spike up. But notice, one of the things I talk about in my book is when you get something like this, that usually is going to define the range for some number of bars. And we're on the monthly here, and usually it's about 7 to 9 bars. And so, you probably got another 3 or 4 to go before you're going to try to break out one side or the other. That big wide price spread, high volume bar is going to define the range. So in other words, this thing can trade all the way back down here or all the way up here. And if it does it anytime soon, the odds of it breaking out are not that great, right? It's probably going to continue to consolidate. So that's the first thing I would note when I see something like that. So when you see these big spikes up, right, and I suspect on the weekly you have it too, and you do, and you can actually use the weekly bar as your bar, right? That's going to define your range for some period of time, usually 7 to 9 bars, and on a weekly you're 2, 4, 6, 7 into it. So this thing, is getting at the point where it can do something. Now that 7 to 9 is usually the best you can expect. This thing can go for a very long time. And I don't have any rule of thumb for how long it can go. And I don't have a rule of thumb for average. I just have a rule of thumb of how soon do I typically notice any of these starting to break out. And usually that's 7 to 9 bars. Okay, so that's the first thing. This was in a downtrend, right? And then you got a big spike up, high volume spike up. So the first thing I would ask myself is, was that short covering? Was it simply short covering? And the way I usually tell that is I go over to my site and let me grab it. Here we go. Let's go in here and let me get rid of that and let me see if I'm logged in. I think I am. Yeah. So if I come into here, come to Tools, Trading Cube, and quickly throw that symbol in, BIOG. And there's other places you can find this. I just happen to have it here on my site. So if I come down here, I can see what the short interest is. And I've got a huge short interest, 78%. So the huge majority of these shares are short. Okay, so that tells me that more than likely all you saw here was short covering. So in other words, it started to go up in price and everybody started to cover. And that drove it faster and faster and faster up. I would expect this thing's probably going to drift all the way back in towards the lows before it's done. So my suggestion would be this is probably not something you want to stick around in if you get an opportunity to take your money. So let me go back to the daily chart, and I'm just looking for a zone here that you can try to trade off of, and it's right here. And so that high is this bar, which is 295. That low is 262. I think you told me 302 is where you got in. If you get that spike up into this area, I would probably take it off, personally, right? Because I don't think you're going to see this trade up here anytime soon. That was short covering. Short covering is what drove this thing, and that's what spiked it at the high. And a lot of times those don't get tested for a very long time, if at all, when they're on short covering. So BioClinica, I keep saying Biogen, sorry, BioClinica is not something I probably would want to stick around in. And that, that's just, how would I trade this, going back to your question? The first thing I would have done is I probably wouldn't be buying this one at all. I probably would have been shorting it. So once I get some sort of spike back down and a spike up, I probably try to trade that short where I can define my risk. But given that this has such a high short interest, I wouldn't even do that. A, you might not even be able to get the shares to short. And B, I don't like shorting something that's at that high short interest because you get these huge spikes against you. And I don't want to stand still when something goes against me. In this case, $5 on a dollar stock. I mean, that's ridiculous, right? So that's, that's kind of the scenario here. This is not a stock I'd even probably trade. Now the other one's a little different. It's actually in an uptrend, and this was IGI Labs, and let's go to something longer term. You can see a nice big run up, and the run up from here was what, from $1 to high of 12. So again, huge run. This is over about 2 years. So yeah, it's a huge run, and it's consolidating, right? It tried to consolidate. Well, it actually consolidated here once before, so from about 2.25 to 12, that's still a $6, I mean a $10 move on a $2 stock. That's 500%. That's a big percentage, right, in a year and a half. So that's the first thing. Okay, so you got a stock that's already gone up a lot. So now how can you trade it? Okay, so in this particular case is like when it finally trades off, I want to look for a place to get into it. And I'm going to have to go back to the weekly because the left side of the chart's already moved on me. And on the weekly, and this is kind of dangerous, but on the weekly you have 3 swing point lows lined up, and you didn't hit them with volume, so you're actually okay. What I'm looking at here is I'm saying, okay, all these swing point lows, there's one here, there, and over here, right? Sorry about that, but I'll mark them this way. So you got one here, here, and here. It broke one. You can see the sideways trend it went to, but it didn't have the volume on the break. As a matter of fact, the volume's on the top. So that's actually not a bad thing. It did have volume coming off this top, which is not a good thing. It went back up, and then get a big wide price. Oh, it is volume coming off the top. Yeah, off of that. Yeah, so again, unfortunately, I didn't see this when I was looking at it a little bit earlier. I think this one's probably going to trade lower on you still. So I don't see a good trade here. In other words, on the way back up, this is going to be huge resistance. Yeah, you got resistance all in here where it is now, but you got big resistance up here once it redraws tonight. You've already broken one swing point low. You've got 2 more right up underneath you. If these break, you're going to come back into this bar and probably test back into the swing point high, which would be your retest regen. That looks to be where it's going to try to go to. And so the trade here is back to there and potentially as high as this resistance zone up here. But I don't like the setup right now. How do I trade something like this? Entry is everything. If you can't, the thing you have to realize is you need to be able to look at multiple places to put your money. You don't want to get keyed in on, say 10 stocks, and I always look at those 10 because those 10 might not be doing anything, and I might take a bad trade in one of the 10 just because I want to do something. I want to be able to look at 7,000 stocks and find the 10 that are worth looking at on a daily basis. And I built tools to do that. That's what I do. And I also, of course, look at post-earnings trades and other stuff. But, I have the ability to zero in on the best trades because you really want to pick from the best. And that's what the third book was all about, is Trend Trade Setups, is like, how do you find the best trade, right? If you come back to this, and if you haven't looked at the book, and I'm not trying to plug it, but if you haven't read these 2 books, you really should if you're watching this video. And so I really want to try to trade the best stock. You may be able to get a trade up into here, but you'd have to probably sell some into it is what I would do. And I want to try to buy it down here somewhere on the retrace. So that's my personal opinion of those two stocks. As far as how do you trade the smaller stocks, you don't trade them any differently unless the volumes are extremely thin. These volumes are not thin. They're doing 2 million shares, and I think that other one was big too. Yeah, it's doing a million. Yeah, these are doing a million a day. So it's not like these aren't trading. So I don't think you trade them any differently. You look for the neoclassical concepts. You look for the retraces into anchored zones that you have some confidence in, and that's the way you trade them. All right, I'm going to be back here. We'll do the final thoughts and call it a night. As we come back for the final thoughts here, I want to grind home this idea one more time that our markets, the domestic markets, the U.S. markets, they're not trading off their own news. They're trading off the world markets. If I'm looking at the CACs here, the French CACs had a congestion zone, gets a little push up, now it's congesting again. That doesn't look bad, but you had some huge volume spikes up here. I'm not sure what's happening with all that. But what really is more interesting is if I look at the DAX is actually pulling back. So the DAX is coming back to do a retest regen off the prior swing point high. And I don't have my volumes in here yet, but I think the volumes were actually a little bit lighter today than they were on that swing point high. So this is the test. This looks like this thing's going to continue to consolidate for a while. If this is consolidating, that's not going to push our markets up. And why would this potentially consolidate? Well, it's gone up 30% in 3 months, 4 months. That's a long way for a market where the economy sucks. So I don't know that we're going to get a huge run out of this. This is done its run, right? Now the place that's still doing the run is over in China. Now I don't know how much farther it's going to go because this is emotionally driven. But the Hang Seng, right, the H shares here up. I know Shanghai was up even more on a percentage basis, gets over the highs. What we didn't see last night is we didn't see the Hong Kong stocks do the same thing. Now maybe they're going to come back and buy these tonight. But the Asian market continues to push. But folks, it's not like these haven't ran either. I mean, the Hang Seng, comparatively, no, it hasn't ran nearly as much. But I was going to pull up the... let's go back to the H shares and just pull into the monthly. This is a fairly significant run on these shares, and if you look at the Shanghai market itself, it's even more dramatic. So I don't know that our markets are really going to push that much higher themselves. And so when I think about it from that perspective, this up and down stuff we've seen, it more than likely is going to continue. So in other words, you go up. In this case, it was the breakout, the ABC. But then you had the pullback, right? The spike, the pullback, right? Back and forth, right? This has been going on for a while. Yeah, if this is a little pullback and you get another push up, and I think it could be, right? You can get a new high, but then you're probably going to pull right back down again. I think this is going to continue this year. I don't see it changing because why? What's the catalyst to take this U.S. market up higher? This market has gone very high. We were just talking about how much other markets have gone. Look at this one, 14 to 21, 700 points, 50%. 50%, I know it's 3 years, but still, that's a huge move in an index, a mature index, right? 50% is a big move. And you have all those catalysts that were there, they're not there anymore. So we're trading off the rest of the world right now, and we're going to trade choppy and sloppy as a result of it. Have yourself a great night. Take care. I'll see you on Sunday. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great one. Take care, and I'll see you next time. Good night.